Welcome to TradeTheMBA.com. This is Jonas Reports for the 26th. Well, we failed to have the midterm buyers cross above the red line here, which is the long-term buyers. So all that was supporting market at that point was short-term buyers, and shorts were still maintaining themselves above that zero line, and it was enough that once the selling started, blew through the ABM yellow and just brought ourselves all the way right back down. So equivalently, coming all the way back down to the early part of the month, still slightly above where we were at the start of it. So all in all, it wasn't horrible, but it's just, again, we've talked about this before. You can spend an entire month going up, and then in one day, literally wipe it out. And that's just the nature of the way selling works. Once those stops get hit, they start going through. Before, people bought the dip on the last one. A little momentum came with that, but wasn't backed up. And when you don't have that backup, you get a further implosion. Of course, we talked about this, the NASDAQ being the leader, because it had outperformed overall, and so it's pulled back a little bit more significant, simply because it was stretched a little further from that standpoint, but also it wasn't getting the corresponding increases in midterm buyers net that we saw in the S&P, so definitely a lagger, because we also noticed the extremes below the red line. So we knew that every time that there was a pop, those lows would be revisited, and we've made new ones that still haven't improved from it. So until you see an actual extreme histogram, of course this is the current day, hasn't finished yet, but you're looking for that to move above the red line as a sign that there's the beginning of some turnaround. We do see some modest action. When we get to this negative 22 to 24 range on the DOC, oftentimes you get pushed back up. But that can happen even within any downtrend. What you get is steep down bars, push back up, and then it just continues unless there's a significant change. Without the orange dipping, don't see any sustainability so far. This weakness and the lack of any inflationary pressure is still putting pressure on gold to not going anywhere. Of course, we've been following Bitcoin, also struggling within the same weakness. Of course, we had our algo levels that were set up. We ended up with that 50% pullback, but you can see there was never any steel reset within that. So within that broader context, when that turnaround DOC spread on the spider right here came in, boom, just moved right back exactly to the same algo level as before. No shock within that. And what you're going to see is when you have big market down days like we used to see with gold, where people would liquidate those positions to cover longs or use that money to buy the dip, so to speak. Same situation here. You had significant liquidation. So you're kind of seeing this operate in the same way that we would always refer to gold from its broader construct. It's just a little easier in the crypto now that it's really made a significant move. Of course, the continued disaster that is the euro, despite the prop up that we had seen pulling back a little bit within that range, it's still way elevated. But the anticipation was that you would have this massive stimulus coming out of the U.S., and of course that still may happen, but it's becoming a little bit more problematic and is being delayed. So as that happens, I think you see more weakness. Looking at the 5K from where we are currently, you can see in the post-market here, after the big decline, we've been just back and forth, a lot of noise. But if we go back to the beginning of the day, a little bit of magic there, and we start off with what we saw was the short, and this was up in the 39, oh geez, all the way up here in the 39.30 range. And once that first short began after the after hours market, we had just a couple little buy scenarios. But again, I like to follow the fact, looking for DOC resets like the one that took place here gave the strongest potential, but it took forever for the orange to finally dip. So it really didn't have as much momentum. And as soon as you get the rejection right here of cyan green, right at literally the peak, the next bar turns to the negative, and that creates the new lows. And then it just became a cycle of that back and forth as we ever continued to not see that steel dip back below the red. a couple of times dipping to below that zero where you then look for that transition, particularly with the rising gold. But when that rising gold happened and then you end up with this expressed weakness, that usually creates a much steeper decline. This wasn't a bad setup here with the step down here, but I usually look for right around 5 bars after that happens. 2, 3, 4, 5, 6, 7, 8, 9, 10. It was like 12 bars before this setup takes place, which is a legitimate buy configuration. But you see it spidered literally immediately and began the shakeout rollover from there, coming off the dip of the red line. So expected that low to be revisited. What I would be looking for in this case was the buildup of DLC red with a corresponding power mode 2, but you can see power mode 2, even when this orange dip came, wasn't in a buy configuration, at least with the rising azure, with the magenta dipping back below. It started to happen a little bit later, but again, that was under this expressed weakness all the way through. And finally, after that final dip, we ended up with a similar setup right here. Again, this time the green crosses over. The orange doesn't dip below until right about here, signaling much more improved, but still below negative 13.5. So it's not until this secondary setup happens where you're actually above that negative 13.5 on the shakeout that we finally got a bit of a run up that took us back to really what we had was declining 100%. And you tend to get that push up towards it and finally reaches that 100% just a little bit further over. Produces another DOC spread, which was that sell-off towards the end of the day. And when you get a big down day like this, even when you get pop back moves, they tend to fade pretty quickly, and that's exactly what we saw coming out of this. And, well, it was just pretty even back and forth. Once you get into that mode of bouncing back and forth, it just becomes these quick little mini trades within the broader short. But being short from the higher levels, it's just a matter of then either trail stopping until you get these clear buy configurations. And a lot of these, what I looked at is I looked at them as short cover positions and wait for a more secure long. Clearly amongst those would be the buildup of that DOC red coming from below the negative 13 to above, sort of like right here. Exact same configuration. The first one dipping down gets a brief little move, but it's the secondary one that had a little bit more significance to it because you had the much improved shakeout that had already retested the lows on higher extreme histograms. So you can see that it makes the lower low, higher extremes. And that's exactly what we're talking about for the daily. So worth paying attention to as well. All in all, good action. And again, these ranges, we expected this volatility in February, and it's been beautiful from that standpoint. As always, though, anything relevant, I will certainly update on the Skype chat. Trade well. We'll talk again later.